any once. Okay, so it looks like, right, price is exhausted, right? It's been since beginning of April, we're not going anywhere. We're not breaking to the upside, we're not breaking to the downside. Look, judging by February, judging by December, you know, if we're not going higher, well, then we're going lower, right? That's kind of the thought process. Because the good news market, you know, is still down, right? Even though we had better than manufacturing and services data, why is market not rally? It's, you know, it feeds well into a soft landing narrative, but the market is still down. So what are the what are the important data to look at? So the bull case, one of the bullish argument was, look at the semiconductors, right? It almost recovered, not almost, 62%. It recovered 62% of its losses. Strong rally, 50% rally. From 170, we went to 260. And semiconductors are leading indicator, right? If semiconductor is considered to be operating system of our economy, you can't really do anything without, you know, having a chip. Doesn't matter what it is. So you need chips, right? Semiconductors everywhere. And same kind of idea, right? It's kind of a classical retracement in the bear market where it retraces 50%, 62%. And now it's breaking down, right? You can see it's kind of leading to the downside. And it's probably, well, it's broke through April lows, right? So it made new lows in April. And now it's sitting at the key support, which was kind of the beginning of the March high, right before the breakout, and sitting on very support. So very weak performance in semiconductors, despite, you know, despite LRCX having a decent earnings, right? LRCX almost trying to break out to 52-week high. We have ASML delivered better than expected earnings, right? So it kind of rebounded almost at 52-week high, and even TSM, which had pretty dismal, you know, forward-looking guidance, but on earnings, at least initial reaction, it was significantly high. You can see kind of a reversal in TSM, and now sitting in support. So what is going on, right? So that is what technicians are looking for, right? One is semiconductors considered to be a leading indicator into price action. It is pulling back. It is sitting on a very key important support level, right? Even here, August high, right? It briefly broke through the August high, which a lot of technicians look for, right? QQQ did not break through August high, right? QQQ, well, right. So QQQ did not, this is the last, you know, rally in the bear market was the strong performance in August, right? From you know, from the, I guess, June lows, right? So, and QQQ did not reach that level, but semiconductors did, right? And it's a very strong argument, and now they're pulling back. So that one level I would watch, and that's why I'm still bearish on the market, because semiconductors are rolling over despite, I think, better than expected earnings. And then the other one is small caps, right? With all the regional banks issues, right? You're not supposed to say this is a crisis, right? You're supposed to say now it's tremors or noise. So whatever you want to call what happened in March in Silicon Valley Bank and other banks, you can see that small cap stocks, whether it's a financial, biotech, small cap technology stocks, they're struggling with the rebound, right? They're not at the August high, very far from August high. Like QQQ close to August high, semiconductors are close because the yield has dropped. But the yield has dropped because of the fear of the recession. And because of the fear of recession, then the regional banks and small cap stocks are underperforming, right? And you can see small cap stocks are also rolling over. So if the semiconductors are rolling over and small cap stocks rolling over, and banks, despite, you know, great results from JP Morgan and Bank of America, also looks like pretty weak rebound, very far from August high, right? Not very far, 50%, right? So still underperforming. So that's the argument that people are waiting for Microsoft and Apple results. I assume they're not going to be better than they were in January. If anything, I think they're going to be worse, right? Because Amazon already came out and say, listen, the margins are contracting in the cloud-based computing, right? So cloud-based Azure business, AWS, they're slowing down, and that was kind of forward-looking indicator on the health of the economy and businesses, right? Because if you need cloud computing to run almost any businesses now. So if people are not buying cloud computing, if they're not resubscribing, not renewing, right, then that's an issue. And you can also see this in the price action of AT&T, right? Kind of just sharp pullback with the idea that anything that has to do with subscriptions, it's kind of winding down, slowing down significantly, right? And same thing was price action in Netflix, kind of all slowly rolling over. So that's one of the arguments to be bearish. Also yield, right? Yields precipitously dropped. We do have a rebound today, so this is bullish, but I think it's just a matter of time. Next print, when we have worse than expected data, right? It's a kind of mixed bag. We had the leading indicators. Why is this not being updated? Right, leading indicators are disaster, right? It's kind of accelerating, which is a lot of people are watching leading indicators. Are down, right? Existing home sales slowing down. The Philadelphia Fed manufacturing survey, right? Big drop, deflation. Also, all considered that economy is slowing down, right? Today we had a little bit better than expected. So, we have kind of mixed picture, but still, I think, it's just a matter of time. Yield has continued. It's a pretty weak chart, right? It's sitting on this key support, 3.28. It's just a matter of time to break below that level. And if once it does, I think, the pullback will accelerate. The bright spot for the bulls is $1, right? Dollar is sitting at, I don't want to say, almost at 52-week low, right? So it's sitting at, it's sitting at 52-week low, right? 50% retracement, that's very bullish, right? Weak dollar is good for, China, it's good for emerging market, it's good for commodity-based, countries, it's good for S&P 500 companies. Weak dollar is good, right? Strong dollar, signs of distress, right? So that's one bullish argument that still kind of makes a lot of sense. But now there are crude oil. A lot of people are mentioning crude oil. It kind of closed the gap after the OPEC announced the cutting of the oil supply, and we closed the gap, right? Precipitous drop. Why? Again, fears of recession. Fears of recession.